This is Nightly Business Report with Bill Griffith and Sue Herrera.
The tweet heard round Wall Street. President Trump and China's President Xi say they will meet at the G20 summit next week, sending stocks into rally mode. California dreaming of a trade deal. Why the Golden State has a lot riding on the outcome of those talks with China. And the color of money. Facebook unveils its own digital currency, making a big push for it to go mainstream. But how exactly does Libra work? Those stories and more tonight on Nightly Business Report for this Tuesday, June 18th. And we do bid you a good evening, everybody, and welcome. Sue is off tonight. We begin with trade and talks that are back on the calendar. The leaders of the world's two largest economies are now scheduled to meet next week at the G20 summit in Japan. And that was all investors needed to hear, and stocks took off today. The Dow Industrial Average rose 353 points to 26,465. The NASDAQ added 108. The S&P was up 28. But it wasn't just trade that drove today's big rally. Bob Pisani is at the New York Stock Exchange.
Stocks were in full rally mode today, fueled by high hopes for trade talks and easy money across the globe. That's what moving things these days. Futures first roared higher around 4 a.m. Eastern time. European Central Bank President Mario Draghi said there was a strong case to be made for more economic stimulus in Europe, meaning more bond buying generally, if the economy did not improve. That sent a signal to the markets that more easing could be ahead. That sent the euro down against the dollar. It gave a boost to European stocks and the U.S. stocks. Then President Donald Trump tweeted out that he had a very good phone conversation with Chinese President Xi Jinping, and the two plan to meet at next week's G20 summit in Japan. That one tweet sent the Dow up 150 points in less than 10 minutes, with trade-sensitive groups, the usual names, industrial stocks, semiconductor stocks, metals and mining stocks, all outperforming. The markets are now taking a wait-and-see approach as the Federal Reserve meets to discuss its next move on interest rates, with many expecting the Fed to lay the groundwork for a possible rate cut in July. Right now, the market's pricing in a roughly 80% chance of a rate cut next month. Tech stocks had a big day, not surprisingly. Microsoft rallied to another all-time high. And worth noting that almost a quarter of the gains we've seen in the S&P 500 have come from four stocks: Microsoft, Apple, Amazon, and Facebook this year. 1/4 of the gains in the S&P from those four stocks. What group was left out of the rally? Financial services. Some of the names like MasterCard and Visa, which have run up big this year, well, they were down amid news that Facebook is launching its own digital currency called Libra next year. Crypto experts stress that, unlike Bitcoin, this Libra will be backed by real money. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Art Hogan joins us now to look ahead at the two biggest issues facing the market right now. That would be tomorrow's Fed meeting and next week's G20 summit. Art, of course, is the chief market strategist at National Securities. Welcome back, Mr. Hogan.
Thanks so much for having me.
Boy, the guesses are all over the board for the Fed meeting tomorrow and the decision and Jerome Powell's news conference. You want to add your guess to all of that?
Yeah, Bill, it is amazing. I don't think I've ever seen such a spread in terms of interpretation of where the Fed stands right now. There are some of my counterparts that think we're going to raise 3 times this year, and some that think we're going to raise none. I think we get one rate.
Cut.
Well, I'm
We're
sorry.
so attuned to saying raised, I know, right?
Right. So, and I think we cut one time. I don't think it happens anytime soon. I don't think there's enough evidence in the economic data stream for Jay Powell to go ahead and throw some more monetary policy at the economy. I think what is happening here is, and I think you hit it on the head, we've got two things we're concerned about: trade with China and monetary policy, and they're intertwined. And the tricky part is, the better trade gets, the less likely you'll see monetary policy kicking in, and monetary policy, in effect, has to come into play because trade policy is not doing well right now. So there's they're kind of locked at the hip.
So next week they meet at the G20 summit and presumably jumpstart the talks once again. Does Wall Street care about the details of a trade deal, or do they just want to see a handshake?
They want to see a handshake. They want to see movement forward. It's been 45 days since we stopped talking to China. May 3rd, we went in reverse. Trump tweeted out that he's escalated from 10 to 25% on the tariffs that were out there already, and that was a step backwards. And going into that weekend, that was a time frame where we thought we were on the threshold of getting a deal done. So that was a major disappointment. The market obviously reacted to that. We've been on this holding pattern for 45 days with the hope G20 was the pivot point. Now we know there will be a meeting, and that's the most important thing. We're moving forward. I think both sides of this equation want to get something accomplished. Obviously, there's sensitivities around the detail, but I don't think either side wants to be in a mutually destructive, long-term, drawn-out trade war that hurts both economies and certainly hurts the global economy.
Indeed. Well, it's going to be very interesting over the next week or so. Art, good to see you again. Thanks.
Nice to see you.
Art Hogan with National Securities. And Wall Street may have had a strong reaction to that news of the trade talks with China, but in Washington, there is still a lot of work to be done and a lot at stake. Ilan Mui has more.
Here in Washington, advisors for President Trump are getting back in touch with their counterparts in China to lay the groundwork for the G20.
Our people are starting to deal. As of tomorrow, the teams are starting to deal, so we'll see.
The Trump administration is threatening to impose tariffs on another $300 billion in Chinese goods if this deal falls through. That would mean basically everything the U.S. imports from China would be taxed. That prospect worries Chuck Grassley, the Iowa Republican who heads the powerful Senate Finance Committee.
2 years ago, if you'd talked to me, I'd said, well, the president's going to be crazy if he puts tariffs on China. Now, as I told him, I admitted to him, I know China wouldn't be negotiating the big things that are negotiating if tariffs hadn't been put on. So if they're a tool is one thing, but as a policy, they're catastrophic.
But at a hearing today, Trump's trade ambassador told the committee that talk alone won't keep China in line.
It's a long history of them violating the norms of intellectual property and similar norms, moving forward and making promises and not keeping the promises. So we're in a position where we view ourselves as having the most serious problem you can face in the trade space, with nothing less than the jobs of our children on the line.
China is not the only trade deal hanging in the balance. The White House is also negotiating with Japan and the European Union. Most importantly, it needs Congress to approve the new trade deal with Canada and Mexico.
Just think of all the number, particularly Democrats, that said NAFTA is no good for the country. Well, this is an improvement on NAFTA. How could any Democrat vote against it?
The administration has already begun reaching out to Democrats in hopes of passing the deal by the end of the summer. For Nightly Business Report, I'm Ilan Mui in Washington.
And states are also welcoming news of trade talks, especially those that rely most heavily on Chinese markets. High on that list is California, which does about $175 billion a year in trade with that country. Scott Cohn is at the Port of Oakland for us tonight.
Importers and exporters in California are resourceful, that's for sure. 1 year into the trade war, they're still finding ways around the tariffs. So at the Port of Oakland, which specializes in container ships, agricultural exports in the first 4 months of this year are actually up by 12%, including a 5% increase to China.
They are finding other markets. They're tapping other things. They're being creative of where they're sending their products to other countries.
Countries like Taiwan, Korea, and Vietnam. But with tariffs rising to 25% on some goods this month, they know that can only last so long.
25%, we've heard from most companies, is a level that companies just simply can't absorb.
The biggest impact is on products trading directly between the two countries, like agriculture, chemicals, and electronics. States that deal in those commodities have the most to lose. So in 2018, Louisiana saw a 61% drop in the value of its exports to China, 34% in Illinois, and about 0.5% in California. But California Senator Dianne Feinstein says the numbers only begin to tell the story, writing in a letter to U.S. Trade Representative Robert Lighthizer this week that California companies are warning the tariffs are damaging their competitiveness and in some cases threatening their existence. Back at the Port of Oakland, they know their good fortune could run out at any moment.
The unknown and the uncertainty is if this continues and tariffs impact these volumes, in the future we could see some falling off of our volumes.
A breakthrough between Presidents Trump and Xi next week wouldn't necessarily turn things right back to normal. Some customers on both sides have already found alternative markets and could be slow to switch back. One early lesson from this trade war, the impact is surprisingly difficult to gauge. For Nightly Business Report, Scott Cohn, Oakland, California.
As we talked about earlier, the other big focus for the market right now is the Fed. Today, the central bank policymakers began their 2 days of meetings. And as they decide on the direction of interest rates, our Steve Leisman surveyed strategists and money managers about their outlook for rates and the potential for a recession.
Growing concern about economic weakness both in the U.S. and abroad, along with increased trade uncertainty, has respondents to the CNBC Fed survey ratcheting up their chance of recession. It now stands at 30% probability of a recession in the next 12 months. That's the highest in 8 years for the survey. Just last month, it was at 22%. As a result of this increased concern about recession, the expectations for rate cuts in 2019 stands at 67%. 22% of the 45 respondents think the Fed will remain on hold. 11% actually forecasting a rate hike. On average, the group is forecasting just one 25 basis point rate cut from the Federal Reserve. But of those who think they are going to cut rates, they think there'll be 2 this year. When will this happen? 14% think the Fed might announce a rate cut as soon as tomorrow. But 29% say sometime between July and September. 23% say after September. Why will the Federal Reserve cut? The top reason is a weakening economy, followed by inflation running below the Fed's 2% target. Some believe the Federal Reserve will be reducing rates in response to the inverted yield curve, where short rates are above longer-term rates. Pressure from President Trump on the Federal Reserve to cut interest rates is seen as a small factor. Kathy Bostjanek, chief U.S. financial market economist at Oxford Economics, writes in response to the survey, the Fed will signal it stands ready to cut rates if downside risks materialize, but it does not want to preemptively lower rates before seeing evidence of much slower growth in the economic data. John Riding, chief economist at RDQ Economics, says, we have marked down our forecast because of the uncertainty surrounding trade negotiations. Even if there are no tariffs imposed on Mexico and the U.S. reaches a trade deal from China, there's the uncertainty that another shoe could drop. The trouble with forecasting the economy and the Fed stems in part from the trade uncertainty. Presidents Trump and Xi now appear as if they'll meet next week in Japan. A positive meeting could remove concerns about new tariffs, which sparked the latest hue and cry for rate cuts to begin with. Or it could all go the other way. For Nightly Business Report, I'm Steve Leisman.
We have also been following the housing market closely, and today an important gauge of home building decline. Housing starts fell by 0.9% in May. That was a steeper downturn than expected, and it points to fresh signs of weakness. But there was a bright spot. Residential building permits, which are seen as a sign of future activity, they rose last month. In fact, it was the strongest monthly rate of growth since the end of last year. Time to take a look at some of today's upgrades and downgrades. Oracle, we begin with tonight, was downgraded to neutral from outperform at Macquarie Research. The call comes ahead of the company's earnings report out tomorrow. The analyst says that the business software company is underinvesting in its future right now. Price target, $55. That stock fell a fraction to $52.90. KB Home was downgraded to underperform from market perform at Raymond James. The analyst says that the stock's valuation is just too rich right now, and margin concerns are mounting. Shares fell more than 2% today to $25.56. And Bank of America was upgraded to outperform from market perform at BMO Capital Markets. The analyst cited the stock's valuation and the belief that consensus estimates for the bank are too low right now. Price target, $37 a share. The stock rose more than 2% today, closing at $28.62. Still ahead, the future of the ad industry starts in the south of France.
I'm Julia Borston here in Cannes, France. Rival brands and ad platforms here at the Advertising Festival are teaming up to tackle offensive content. We'll have that story coming up on Nightly Business Report.
Facebook today unveiled a digital currency. It's called Libra, and it's set up to be an alternative financial system using secure blockchain-based technology backed by hard assets. The social media giant has lined up big corporate partners like MasterCard and PayPal and Uber, and it's all designed for ordinary users, which Facebook says is one of the things that sets Libra apart from other cryptocurrencies like Bitcoin.
If you want to compare Libra with traditional cryptocurrencies, the first thing and the first big difference is that typically cryptocurrencies are investment vehicles or investment assets rather than being great medium of exchange. And this is really designed from the ground up to be a great medium of exchange, a very high quality form of digital money that you can use for everyday payments and cross-border payments, microtransactions, and all kinds of different things.
So how is this going to work? Joining us with a quick tutorial on Libra is Ben Fox-Rubin. He's senior reporter at CNET. Good to see you, Ben. Thanks for joining us tonight.
Thank you for having me.
So as he said, I mean, a cryptocurrency like Bitcoin is meant to be a store of value, something like gold. But with Libra, this is more of a transaction mechanism, isn't it?
Yeah, in general, it works a lot like most any other digital currency where what you would do is take your dollars or any other currency, transfer them over into Libra, put them in a digital wallet. This one's called Calibra. And this is where it changes. Instead of actually keeping them in the digital wallet and hoping the value goes up, the argument would be that you would actually use it for goods and services. At least that's what Facebook is hoping to do here.
And this is backed by a basket of currencies, right? I mean, these are for international transactions as well.
Yeah, arguably Bitcoin and a lot of other cryptocurrencies could also be used for international transactions. You could argue that Facebook is really trying to do what Bitcoin was hoping to do, to create an international currency that kind of wipes away borders and boundaries and makes it much easier to do cross-border transactions. So we'll see if that actually comes to bear, obviously.
There are at this point, no banks involved in this consortium. So who's holding on to my money when I give it to who? Facebook or somebody?
So there is an association, a nonprofit association called the Libra Association that is going to be operating this. But that's a really good question. I'm kind of not entirely sure what happens to the money when you do convert it into Libra. Even though there aren't banks involved, there are some very trusted names in the financial industry that are going to be involved. Those include PayPal, Visa, and MasterCard. So it's not as if this is kind of a willy-nilly group that doesn't know anything about finances.
And again, this is more, as I understand it, about peer-to-peer transactions. I'm not going to go out and buy a hamburger with this necessarily unless a McDonald's or some other fast food chain decides they're going to accept Libra currencies, correct?
That is entirely true, and I would probably say that Facebook is really hoping somebody like McDonald's would start accepting Libra. The way Facebook is trying to push this, they're saying ordinary Americans, ordinary people from all over the world can jump on the digital currency bandwagon and potentially use this digital currency for any number of goods and services, whether they're making a purchase on eBay, maybe they're paying their bills, or they're also sharing money with friends and family. So they're hoping anything and everything can be used with Libra.
Very quickly, Sheila Bair, the former FDIC chair, told me today she's skeptical this gets off the ground because of regulatory hurdles. What do you think?
That's possible. I think a lot of the regulatory hurdles that Facebook faces have a lot to do with the potential that it has a monopoly. So that is definitely going to be a consideration. As far as regulation related to cryptocurrencies, there really aren't that many. So I'm not entirely sure what's going to prevent this kind of thing from jumping off the ground from that regulatory perspective.
Right. Clearly, a lot more questions than answers right now. We'll see what happens. Ben Fox-Rubin from CNET. Thanks again for joining us tonight, Ben.
Thank you.
Boeing lands a new order for its 737 MAX planes, and that's where we begin tonight's market focus. British Airways parent company International Airlines Group said it's going to buy 200 737 MAX planes worth $24 billion. The 737 MAX, as you know, has been grounded since March following 2 deadly crashes. Boeing shares rose more than 5% today to $373.96. Kellogg is cutting about 150 jobs. It's going to take a pre-tax charge of $35 million as part of a revamp of its North American unit. The cereal maker is looking to slim down by selling its cookie business, which includes the Keebler and Famous Amos brands, as well as its fruit snack products to Italy's Ferrero Group. Kellogg fell down nearly 2% today to $55.50. Fifth Third Bank is reportedly planning to shut down 44 branches in the Chicago area next month. The Chicago Tribune says the move comes as a result of the bank's nearly $5 billion acquisition of MB Financial. Fifth Third shares rose more than 3% today to $27.88. And CBS is reportedly planning to make an offer for sister company Viacom. The Wall Street Journal says that representatives from both companies have already had preliminary discussions about a proposed deal. Viacom's chief executive Bob Bakish is widely believed to be the frontrunner to become the CEO of the combined company should that happen. CBS shares rose a fraction today to $49.21. Viacom was up more than 1.5% to $29.81. One of the biggest challenges facing advertisers right now is making sure their ads do not appear next to offensive content on internet sites. Now, that has been a major focus of the annual Cannes Lions Global Advertising Festival, which attracts brands, platforms, and media companies from around the world. Julia Borston is there for us tonight.
At this year's Cannes Lions Festival, brands and advertisers gathering here on the French Riviera have a big issue on their minds: offensive and inappropriate content that could be running next to ads. So they're coming together to announce a new solution, the Global Alliance for Responsible Media, which includes the media buying agencies from all the biggest ad conglomerates, the tech giants, including Facebook, Google's YouTube, and Twitter, and 16 of the world's biggest advertisers, including Procter & Gamble.
What we will do together is establish some common standards that we can all abide by, very similar to what we've done on TV and in radio, and where we know we have control over the content and we know that there's control over editorial comments. By coming together and having that, then we know that we can advertise in places that are safe for consumers and safe for our brands.
With the big ad platforms all here in Cannes, this is the first time they and all the other sides of the industry have come together to tackle issues ranging from violent and offensive videos to content targeting pedophiles.
With the goal of first tackling content that poses a threat to society, such as terrorism, the Alliance's members say addressing everything from hate speech to misinformation will build trust by creating a new common standard and accountability.
Yeah, I think this is the Peter Finch network moment, or maybe now the Bryan Cranston network moment. I'm mad as hell and I'm not going to take it anymore. The brands need to speak with their money. They need to, show what they're doing. They need to not just move their lips, they need to move their feet.
And companies such as Twitter, which have invested in cleaning up trolls and fake accounts on their platform, say this will be key for advertisers and Twitter's users going forward.
It's just common sense, is listening to our customers and what's happening, and us not looking to compete on something like brand safety. This is something that ultimately will help everyone succeed. It's important that we have trust in our ecosystem. In many ways, I think this will be part of the legacy that all these companies are laying for the future.
And the future for the ad industry is not just innovative spots that break through the clutter, but also environments that are safe for brands and users. For Nightly Business Report, I'm Julia Borston in Cannes, France.
And coming up, one company's strategy to get Chinese consumers spending. Beyond Meat shares have gone beyond their recent IPO price of $25 in a big way. Today, the stock briefly broke through $200 a share before pulling back. Now, at $200, Beyond Meat had a market value of more than $12 billion, making it larger than 115 companies inside the S&P 500, including Under Armour, Tiffany, E-Trade, and Whirlpool. Finally tonight, the Chinese government wants consumer spending to be a bigger part of that country's economic activity. And one of China's largest online retailers, JD.com, wants to be at the center of it all. company has created a spending holiday called 618. That would be short for today's date, June 18th. Eunice Yoon is in Beijing for us tonight.
Just like Amazon and Walmart are in a food fight in the U.S., JD and Alibaba are in a food fight in China. JD is building high-tech supermarkets like this, where customers can scan fresh produce on their phones and trace where it all comes from. Fresh food is just one area JD sees as a consumer trend for 618. 618 is a mid-year festival. JD created it to get people shopping mainly online. It spans over 18 days. The event is seen as a gauge of Chinese consumption. Consumer spending is a big topic here. The government has tried for years to get the consumer to become a bigger part of China's growth, to rebalance the economy away from exports and investment. The authorities have made some progress, but these days the consumption data isn't encouraging. Sales of vehicles and smartphones are down. Retail sales for May were a bright spot, but followed April's figure, which hit a 16-year low. This, despite the government's stimulus measures. JD believes Chinese demand for international products is only growing, so companies need not be so concerned. This is what one executive told me.
The brand from the international market, and they will tell you China is still their biggest market. And they continue to understand the Chinese consumer and continue to provide the best products to the Chinese consumer. So I think they should be not worried.
Officially, unemployment here is stable, but with the slowdown, the weak stock market, and the trade war, there's a lot of uncertainty, and Chinese tend to save. Even so, despite the trade war, JD says for this year's festival, the U.S. is one of the top-selling countries. And some of the most popular American brands are Hasbro, Apple, P&G, and Bud. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And before we go, let's take a final look at the day on Wall Street. Rally day on those hopes for the trade talks next week. Up 353 points on the Dow. The Nasdaq added 108. The S&P was up 28. And tomorrow, the Fed. That's Nightly Business Report tonight. I'm Bill Griffith. Thanks for watching. Have a great evening. See you tomorrow.